just to go over the product highlights, it provides coverage beyond a no lapse period. So when you run an easy solve, we're really building that product to last like a permanent product. Now, it's not guaranteed like a guaranteed product, but really it's built to weather the storm. And there's a lot of flexibility, not just for the future, but there's also a lot of flexibility when you're designing the policy for your client, which not everybody offers that. And along with that, it's coverage that is issued quickly with simplified underwriting, no lengthy health inquiries, no blood tests. So you can get through a policy, in instantly, or if it gets sent to underwriting, typically it's issued within a day or two. So if you want to go to the next slide, I'm gonna wing this. So Mutual of Omaha's IUL Express, we are still the industry leader when it comes to clients wanting the ease and speed of a simplified issued product while delivering a competitive and realistic return on their premium. I know there's big focus on, return of premium. I want you to shift your focus and your kind of mindset around that is, what if they pay a premium and then they're still going to get that product, but they're going to get a return on their premium? So they're getting two things for one, because, with a term product, you're not always going to get the two piece, you're going to get one or the other. You get both with an IUL Express product. So next slide, which this is the IUL that you want to sell your mom. It's the product that your mom wants to sell you. It's dependable. It's built to weather the storm. And we're going to talk a little bit more as we go into them. So if we go to the next slide, what is your target market when it comes to the Index Universal Life Express product? It really is built for individuals with long-term death benefit needs to protect their family and to replace their income should something happen to them. It's a product that you can sell, a 21-year-old. It's a product you can sell a 30-year-old, a 40-year-old, even going into 50, because then they still have, you're really going to see the benefits of an IUL when it's been in force 20 to 30 years. That's when you're going to maximize the value of an IUL Express product. So if we go to the next slide, I just want to do a brief overview because I know there's some slight differences. Our IUL Express product, it can be written from ages 18 to 75, with face amounts ranging from $25,000 up to $300,000 depending on age. Now I get a lot of questions. Heather, what if I want to write one of these on someone who's younger? I know we don't offer that 18, but don't be afraid of also pivoting to a fully underwritten IUL, because those can be written on your, on children, because there's limited, that we're not going to ask a 2-year-old to do a paramed or a blood test or anything like that. So if you do have clients that, have children that they want to get into an IUL, don't be afraid to pivot, because it's going to be a similar process to the Express product, but you can get those kids coverage. There's only 2 risk class, standard, no tobacco. There's, no wondering, okay, what do I classify them at? And then we also offer 4 indexing strategy. The newest one being the Bank of America Agility Index, which was a nice add to our portfolio. And I always tell people, there's no right or wrong indexing strategy. Think about what your client's needs are, what their financial goals are, why they're getting this policy, and that should help you make that decision for you, or for them, I should say. So if we go to the next slide, I want to talk about kind of the underwriting process. So depending on age and dollar amount, we're going to look at the build chart. We're going to do an MIB, a pharmaceutical check, and then do a motor vehicle, depending if we need to, depending on age and risk class. But the great thing about this, and I'm excited to say, is finally coming, because I know everyone's like, well, placement and persistency, that really, I don't want to get knocked off Mutual of Omaha. We are coming out with a pre-qual that is going to be built into our e-app that is going to run basic checks through these. So that way you're going to know before you go through all of the entire application, you're going to know, are they a good fit? Is there some question, or if you shouldn't? That is coming end of May, beginning of June. So it will be here before you know it. I can't believe we are already at the end of April, whereas the first 4 months of the year gone. But that's going to come, which is going to help you with all of these things. So we're trying to make the underwriting process as simple as possible. Another thing is like multi-use drugs are becoming very, very popular. I think a common one that we've all probably seen is the Ozempics, the Mounjaros, those different medications. Mutual of Omaha is always partnering with Milliman and MIB to try and make sure that some of those get easier to go through. Because right now, Ozempic, immediately we flag it and we get no because it's a diabetic drug. But now people are using it for weight loss. So we are looking at changing some of those rules in the upcoming future too. And if any of you guys have a case that gets declined currently because of Ozempic or some of those multi-purpose medications, feel free to reach out to me. There are some things that we can do to work with underwriting to get those things pushed through. Just might require like a doctor's note or things like that, but happy to work with you guys on that. But definitely still an express simplified underwriting process. So if we go to the next slide, I want to talk about our riders. So Mutual of Omaha has 4 IUL Express no-cost riders. We have our living benefits rider, which is the terminal, chronic, and critical illness rider that's offered in most states. I don't know exactly which ones offer in each state, so I'll refer to the underwriting guide on that. But in a majority of states, we offer those living benefits. So what is so important about those living benefits? It means if something happens unexpectedly and you weren't prepared for that, whether you get the notice that you have cancer and you only have 12 months to live, different things that are unexpected, you're going to be able to get an advance on that death benefit up to 80%. That's incredible for money when you need it there. You're still going to have some death benefit. And the great thing is that if we advance that, we're going to drop down the premiums to reflect the difference in face amount. So it's a great value add. We've got the waiver of surrender charges with partial withdrawals, the guaranteed insurability rider, and the lapse guard rider. Those are all built into the price of the policy. So you're getting a lot. And then if we go to the next slide, hopefully I don't miss any action things that come in. We've got our cost riders. So in addition to that, things that your clients you can also offer your clients is an accidental death benefit, which is a great value add. It's cheap to add that. And then, you don't have to have a health license if it's attached, if the product is an IUL. Disability continuation of planned premium. I love adding this one because nobody thinks that they're going to become disabled. Most people that do become disabled, they think it's because of a work injury. But I can tell you that that's not true. A majority of people that go on disability, it's because of sickness. It's kind of twofold. They get cancer and they have to go through chemo and different things. So there's, it's a great way to continue that policy on. But it usually comes down to sickness. Same with you have the disability waiver of policy charges. And then you can also add dependent children to the IUL Express, but it only comes in the amount of $5,000 and $10,000. There's no kind of wiggle room or in between, but you do have that as an ability to add if you've got a child, a parent that wants to add that on. So why are these important? Why is it good to know these things? If we go to our next slide, I'm going to do a little bit of comparison. We'll call Mutual of Omaha the IULE, and then we've got carrier number 1. When you look at what they offer, both of them offer a similar, ALS, kidney failure, major organ, heart attack, stroke. The great thing is that with Mutual of Omaha, we also offer some additional things that are covered that not every carrier covers. So I think, Christina, if you click, it should pop up a few more. So things that Mutual of Omaha covers are major burns, AIDS, dementia. That is a huge one. to have dementia and Alzheimer's as a part of the living benefits to express, to expedite those benefits, and also aortic aneurysm surgery. So there's a lot of different things that we offer that maybe another carrier or other products don't offer. So if we go to the next slide, I know I said this a little bit earlier, I want to talk about that there's more to meets the IUL than the I. So the first thing is to really understand, how does an IUL work? So how an IUL works is your client gets a premium. When we receive that premium, a portion of the premium goes to pay for the life insurance, it goes to pay the policy charges and fees, and the other portion goes towards the accumulation value. So it goes into a separate bucket and it earns interest based off of whatever index strategy that you've decided. And just, I think we all know, but just in case, we're not putting the money into the index. You don't have to worry about them losing their money. It's just credited based off of the performance of the market that we put it in. All IULs are built with charges and expenses beyond the cost of insurance. There's no way to get around that. But lower fees, lower cost of insurance means that your client's money goes into their accumulation value sooner, and which means they're growing money much quicker than if the policy charges are really high. And Mutual of Omaha has done everything possible to not raise their prices. We continue to keep we're the lowest out there. You're not going to find lower costs and fees and cost of insurance than Mutual of Omaha. And with that added growth, it's also giving added cushion to the policy. Guys, an illustration is an illustration. It's a hypothetical. Really, when it comes down to it, looking how much of the premium is going into the accumulation value is the most important piece when it comes to these. And yeah, if I get any questions, please feel free to stop me. But it builds that cushion, because if the market doesn't perform like Mutual of Omaha anticipated or any other carrier anticipates, it's really going to come down to how much is in that accumulation value. So if we perform at zero, I know we all say like zero is your hero in the IUL world, but I really want you to think is, yes, zero is your hero when it comes to adding money to that bucket. But at the end of the day, the cost of insurance and the fees and policy charges, those still have to come out somewhere. So it's going to pull from that accumulation value. So if someone has, twice the cost of, insurance and fees, that's going to take twice as much out of the accumulation value than if they have a lower fee schedule. So just again, next slide, really just thinking about, so you get a full understanding of how an IUL policy works, is you've got your cost of insurance. It increases as you get older, because it gets more as we get older, we have more things wrong with us, so it costs a little bit more to insure us. But we want to keep the premiums the same across the board from day one to the last day. We want to keep those premiums the same. So no more is coming out of your client's pocket, because the last thing you want to do is call a client and say, hey, I know you're getting older, so we're going to have to increase your premiums. They may be in a place where they can't afford anymore. So the client's premium no longer covers the cost of insurance and the policy charges. Well, we don't want to go to them and say, hey, we need more money. We want to use that accumulation value to cover those extra costs. So that way they don't have to worry about getting that extra bill. And, it's still going to be accruing money. So the premium remains affordable throughout the life of your client. So this is a huge slide. I really like this. And it's built in. All of these things are built in, so it's great. I want to check the questions to see if I missed anything. Okay,
it looks like you actually hit it right on the head on that, Heather. Right, like right timing.
Yeah, I'm trying here. I guess Jordan had the most common indexing strategy. I would say that 100% participation, only because that is what we run Easy Solve on. And really our Easy Solve, like, I learned this phrase from Dylan. I don't know how I feel about it, but I'm going to use it. It's the Goldilocks of, all kind of policies. It is set up to, slightly overfund the policy, but it's also built to take that policy out to age 120, which is, the purpose of the IUL. It's the accumulation value. But at the end of the day, I always want you guys to remember it is a life insurance policy first and foremost. So we want to make sure that we keep that intact, and that easy solve is what automatically defaults and what I see come in the most. But again, look at the different strategies, look and see what best fits. If you've got a younger person that wants to be a little bit more risky, maybe there's a different bucket to put it in, and you don't have to put all of it into one. You could do 50% of the premium, of the accumulation premium going into the point-to-point S&P 500, and you could have 50% going into the Bank of America Agility. So you really can customize it from day one. I love that you can customize it from day one based off of what your clients need. So if we go into the next slide, I just want to do a quick comparison so you guys can really see and visualize. I don't know if you guys are visual people. I certainly am. And this kind of blew me away. So we did a comparison of a 200,000 face amount for a 40-year-old female and a 40-year-old male. So if you look at the top, it's the IUL Express, and you look at the bottom, it's carrier number 1. Red, I put it in red because red is bad, because that's money that's going to the carrier. Blue is what's going into the accumulation value, and that's what's working for your clients. If you can see here, even though maybe things are illustrating higher, we still got 44%, only 44% of the premium for Mutual of Omaha is coming to Mutual of Omaha for the cost of insurance, policy fees, and charges. In other carriers, it's 70%. That's a huge difference of how much premium is actually going into that account. And I think sometimes we think about it month to month. Well, maybe it's only, $10. 10 bucks isn't much. Well, 10 bucks is $120 per year, which in 10 years is $12,000. It really does add up very quickly and makes a huge difference. So these are things to think about. Mutual of Omaha, when you're running your illustrations, you can run that as part of your illustration. We're not going to hide what our cost of insurance is. Mutual of Omaha prides themselves on full transparency. We let you know why our illustrative rate is 5.92 base. We give you all those things because we don't want there to be any questions. And I say this because I want to work for Mutual of Omaha for probably another 30 years. And I want it to be around. So I feel very confident that Mutual of Omaha has built this product to make sure that your clients are protected, and we're continuing to fulfill our promises, 50 to 100 years from now, hopefully longer. So next slide, just so you can kind of see how that equates. So you can see some illustrative rates here. Just because an illustrative rate is higher does not necessarily mean that the growth is going to be the same. Heather, have you had anyone write your family an IUL? Actually, I used to sell. So I make sure I fully believe in this. I wouldn't talk about a product that I wouldn't put on my own family. I'm fully open to talk about my personal plan. It's all with Mutual, and it's because I believe in what we're doing. But if you can see here, if you look at the illustrative rate, there's a 2.5% difference between the illustrative rate. But if you look at the difference in value, Mutual of Omaha always wins. Your cash value is going to grow higher. There's not a huge difference. It's almost apples to apples when it comes to your premium there. And while I think sometimes it's easy to lean on, let me go with the cheapest premium for my client, I really want to challenge you guys to really think, what is best for my client? Is an extra $5 a month, if it turns into an extra $30, $40, $50,000, and it's going to be, 5.92 is still, it's conservative, but I think it's fairly accurate. Mutual of Omaha, we like to under promise and over deliver. It's always good when you can come to your client and say, hey, it looks like we overperformed. So we thought you'd be at this and you're really at that. it's a great day. I don't know about you, but I like free money that's building working for me. And as you can see, when I tell you like these are long-term policies, you should be, 20, 30, 40 years. That's where you're really going to see the growth. And be able to use it as, that retirement tool that we all like to talk about with that in, that accumulation value. So there's a lot of animations on this one, Christina. So we'll see if we can make it through this one. So really, I appreciate you guys having me, minus all of my technology problems. Probably need to work on that. But Mutual of Omaha's IUL Express is still the industry leader when it comes to the type of product that it is and the ease and the trust that your clients want when it comes to a simplified issued product. And we do this through I think you'll have to hit it 1, 2, 5 times. So we do this through low fee structures. We offer a low fee product designed to put more money into your client's accumulation value, which means at the end of the day, we're putting more money back in their pocket. We offer realistic crediting strategies. Our crediting strategies were built to deliver competitive returns while weathering a market that fluctuates. This is to help keep your client's premium the same, and we want to be realistic. We don't want to make false promises. We want to deliver on the things that we're going to do. Day one flexibility. This is huge. You from day one can design this product to fit your client's specific needs. If you want to do easy solve, because we know that takes it to 120, great. If we want to play around with the indexing strategies, we can do that. We want to do like an increasing death benefit or a level death benefit. There are so many different things that you can play around with. And if any of you guys want to play around in WinFlex, I'm happy to do some one-on-one training with you guys, because you've got one type of policy that can do hundreds of things and work for your clients in different ways. And I know it's a lot. You guys are dealing with a bunch of different carriers and carriers with a bunch of different products. So if there's ever any questions that you have, I'm going to have my contact information here at the end, so you guys can reach out to me. Happy to do one-on-one training. Maybe I'll make it, we can spend some time in the future together. We've got a lot of good value in our living benefits. We offer more living benefits. We cover more diseases, ailments, however we want to say it, for those times when life is unexpected. And it truly is a simplified issue product. Our e-application is less invasive than others. And we really want to make a smooth process for you and your clients, because I know it's frustrating. And yes, I know our text signature is a little clunky, but hey, we're moving in the right direction. And, if you're ever having any issues, please don't hesitate to reach out. And then the last slide that I have for you guys today is just my contact information. So I'm a sales director along with my partner, Dylan Cummings. I'm sure a lot of you have seen him, talked to him. I think he was doing push-ups at the convention. So he's working on his fitness, but there is no wrong person to reach out to. We also have an account executive. His name is Josh Morehouse. He is a fantastic resource too. Dylan and I are on the road quite a bit. So Josh is there to keep us sane, keep us straight. And if we need to, pass things along, he's another great resource for all of you. So with that, I've talked for 25, 30 minutes. So I think I've talked enough. So I want to, open it up for any questions, conversations, discussion that you guys may have.
All right, that was a lot of good information. So thank you so much, Heather. I know I took a lot away from that. And just like you highlighted a lot on the different, health elements and just, diseases, so to say, that you guys cover that others don't. I think that's huge. It's also it's a big selling point, because just like Heather was saying, we want to know what's important to our client and how it fits their need, So guys, who has questions? There has to be some questions.
Is that a question for me or for the group?
Okay, so who's the ideal client for an IUL? So Heather, I know you hit for IULE. I know you hit on that a little bit, but
yeah, so it really is a multifaceted product, but I would say it's going to be for your people that need a long-term product. where you're going to see the most growth and, value bang for your buck is what I like to say is when a policy can be enforced for 20 to 30 years. That's when you're going to see the accumulation value really take off. And you're really going to see that growth. Now, if it is a little bit cheaper sometimes than a final expense product for your older client. So as long as you're explaining it that way, that they understand that, hey, this, if they're wanting it for the death benefit versus the cash accumulation, that's fine. But really it's going to be for, your younger long-term need clients.
Love it. The
Oh,
max death benefit.
everyone's favorite question. So currently, it depends on age. So up to age 50, it goes up to 300,000. Up to from 51 to 60, it's up to 250. And then anyone over the age of 61, it's up to 150.
Perfect. And just to piggyback off that too, another way that Mutual of Omaha makes that like really simple is just right in the quoting tool, right? Like you can't quote it, that you can't write it, so that's always helped me out quite a bit too. Other questions, guys?
I have a question. When you are seeking to add additional coverage, like if you had a general IUL and you were paying the general premium of 200, 300,000, and then you say, hey, actually, I want to now start contributing. Maybe that policy was maybe $30 a month, and they're like, okay, I actually want to start contributing 100 or 200 per month. Is it best that they just change it out to what the new premium would be for that new amount? Or is it best to just start a brand new one with just funding it with a certain amount where you want to actually add more to it? I know it might sound, I might be saying it's totally wrong, but I hope you understood a little bit of what I was
No,
asking.
I think I did. Is it adding more death benefit or they just want to max fund it more?
Max, well, from both perspectives, max funding or adding the secondary part, you said.
Yeah. So after the first policy year, that's when you can make changes to the thing. The biggest thing is you want to avoid it becoming a mech because there are tax implications when it becomes a mech. So if they do decide what they can do, they can call our policy owner services and they can run a current illustration on where the policy is currently at. And they can let them know exactly what the max is that they can put in each month
Okay.
or in a year to avoid it being a mech. And depending on where their health is and how much money they have put into it, maybe another policy in addition to that. I'm all about multi-policy plans. Just because you never know if you put, I'm one, I don't like to put all of my eggs in one basket because what if one day I can't afford both policies, but I can afford one versus if I had one large policy, maybe I couldn't afford it. So you definitely have to look at the options on what's going to be best for the client, but you definitely can increase how much they're putting in, which ultimately would grow the cash value and ultimately grow the face amount too. And that's another thing to think of too, is like, yes, I know that our face amount is a little bit lower, but if you are pitching this to maybe a younger client, they're going to have plenty of time to grow that cash value, which is ultimately, if they never use that cash value, it's going to increase the death benefit too.
Okay, and what's the youngest age we can put for a IUL for children?
So for the IUL Express, it's
Express.
18. It's 18 and older,
Okay.
up to age 75. But I want you, we can talk offline about this too. If you've got someone under the age of like 17 or younger, it's worth considering looking at our fully underwritten, our income advantage IUL. It is built, that product was designed in its name, income advantage. It wants to grow that cash value. And there's very limited underwriting when it comes to it. They don't have to do the paramed, they don't have to do blood draw. So it's not completely simplified, but consider it more of like it would be more like accelerated underwriting for a young child versus, the simplified issue on the IUL Express.
Okay. Thank you so much. I appreciate that.
So Heather, is that age 0, like 1 day, 3 days, 17 days?
I think it's 14 days.
14? Okay, I wasn't
Yeah.
sure. Thank you.
Yeah, I believe it's 14 days up to age 17. The only caveat with that is for the income advantage IUL, the minimum face is 100,000. So in order to get $100,000 policy, the parents need to have at least $200,000 worth of coverage. There's a lot of rules and regulations when it comes to children's coverage. For terrible reasons we don't want to talk about. So there are some stipulations, but it has to be a minimum of 100,000 on children for the income advantage.
And Heather, really quick, for that has to be like, for example, for mom and for dad.
So it has to be half of the parent with lesser coverage. So if dad has 500,000, mom only has 200,000, we could go up to 100,000 because it's half of the mom.
Got it.
Heather,
Half
what
of
if
the
they-
lower. That's perfect. Thank you.
Yeah.
Heather, what if they have multiple children? Do they need additional? Like I have a client has 3 children she wants to get a policy on. So would she need a higher on herself because of, or is it just the one, like the 200,000 and each kid could have 100,000?
Yeah, so if she had 200,000, each kid could have 100,000. Again, it's, for reasons that we don't need to talk about on this call is why there's those coverage metrics. But if they have multiple children, yes, it's just going to be based off of like per kid, they can have up to half of what she has. It's not split up like that.
And does her product need to be an IUL, or could she have an old whole life or a term life? Does the product matter?
The product, it doesn't matter. It just has to be a life. So it's life coverage. So it
Okay.
doesn't matter if it's a fully underwritten, if it's a guaranteed whole life. It doesn't matter what carrier it's with. We just need to know that what the coverage that they have. They'll ask that you ask that in the application, but yeah, it's not per child, and yes, it can be any kind of coverage, any kind of life coverage.
Thank you.
And then one other question we had in the chat, Heather, Jordan had asked, what would cause a client to be declined based on health? My quick answer would be, Jordan, same underwriting guide as Term Life Express. But Heather, if you want to hit on that a bit more.
Yeah, the underwriting is very, very similar to Term Life Express. It's kind of, it's hard to make like a generalized statement of what is going to knock somebody out. But I do want to say that pre-qual that's coming out is going to help. But in the meantime, if you've got someone and you're like, I don't know, like they're on this medication, I don't know. We actually do have a risk assessment team that you can call to, and you can go over the phone what kind of your concerns would be, and they'll tell you, yep, this one should probably go through, this one maybe not. So it's kind of like a non-virtual pre-qual that we have. I know it's not the most ideal situation, but we can yes, you use them. That's why they're here for sure.
You gotta utilize your resources, guys. It's like, like you have a risk assessment team. We want to help our carriers help us, right? It's like if we can give them a quick shout, like that's how I learned what companies to use and what companies not to use in particular situations. It takes time, everybody on the call, but not to hijack, but guys, if you're not doing risk assessment calls to the carriers, you're cutting yourself short.
Mm-hmm. Yeah, so there's not like a complete like answer, but yes, if you've written a lot of TLE in the past, it's going to be very, very similar. And sometimes it's a combination of medications. I can't say that, high blood pressure is a knockout, but maybe if it's paired with something else, it would be considered too high risk for us. So there's not like a blanket answer that I can tell you, but again, that pre-qual is definitely going to be a game changer. And, IUL Express counts towards our 4 quarters bonus, and that pre-qual is going to help your placement, because there are many people that miss that bonus because their placement is at like a 50 or a 55, so this is going to help boost those for you.
you.